All right, guys. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, February 25th. We're just getting the release of the durable goods orders, much stronger than expected. 0.49%. Expectations was for a print of 2.9. Comes off a pretty dismal read of negative 5% last month. If you take a look to the revisions, we actually did see a nice upward revision from negative 5 to negative 0.46. Same thing on the X-Transport. Most importantly, goods capital orders or goods shipped non-defense, ex-air, this is a good gauge of business investment coming in slightly stronger than expected with a contraction of just 0.4%. Again, upward revision across the board for last month's data. So the dollar focus that we talked about yesterday, guys, was that break above 12,123, 12,131. That remains key near-term support. You're seeing some lift here. Keep in mind that key resistance is 12,154 still near term. And we do have on tap tomorrow morning, obviously, the highlight of the week, the second revision on fourth quarter GDP. All right, so it doesn't look like we'll get too much play on this. We'll have to see what the U.S. market looks like on the open, but I would expect to see some dollar strength on this move. So good morning to everyone in the room. A quick recap again. Great to be with you guys. Joe, Eileen, Permendra, Craig, Alan. We got a full house here today. Great to be with you guys. As always, feel free to throw any questions or trade setups that you'd like to review as we go through the session. We'll take a quick run through the setups that we highlighted last night, and then we'll open it up to questions on this final webinar of the week. Okay. Good morning. Happy all kinds of data day, says Eileen. Good morning to you as well. Yes, we do have some more Fed speakers on tap. We had Bullard on CNBC earlier today. Obviously, we had some speakers earlier in the week with Vice Chair Stanley really softening the expectation that we might see the Fed move to lower rates into negative territory. And be mindful, guys. The G20 summit kicks off this week as well. We'll continue to see any developments out of Europe on that. Permendra, great to see you. Good morning, my friend. Craig says, good morning, Mike. I'm looking for a long trigger in Euro Key. We'll take a look. If you get a chance, sure. Euro Key, I don't really have a clear setup on, Craig. I haven't actually checked it out. So I'm just going to take a quick segue, guys. Bear with us in the room. Let's see if we can help out Craig here as he's in this position. All right. I like the fact that you're looking for a long trigger. We are at near-term support. The daily structure doesn't give us too much conviction. The only thing I'd be looking at is that 100-day moving average, which seems to be coming in just above the median line off the high. Again, a preliminary median line. Don't want to act too aggressively on this, but you see, again, the last couple of days has been offering some support. Let's see what the near-term chart looks like. Okay. Okay, I'm not going to focus on that. The only thing I would say is I don't really have on the near-term chart on this one, Craig, I don't really have a level of support. And anytime we're looking to use a trigger, remember, guys, momentum triggers in and of themselves don't mean anything. The momentum trigger only starts to suggest or validate a possible position is if it's coming off of a near-term support structure. So you're getting, for example, a topside trigger into support or a short trigger into resistance. But let me just highlight this here. Probably caught that 764 just now. Okay, this is what I'd be looking at. I like the opportunity to get on the long side of Euro Key, just on the fact that I like Euro strength in general. We're looking for the Euro dollar long position, obviously on the swing side of things. So this is the chart I'd be looking at, Craig, if you want to take a quick snapshot. We'll come back to it later in the session once we have time. But it does look like that 64.50 region thereabouts could offer some near-term support here for the trade. All right, let's jump into yesterday's update. So again, on the data front, here's the relative performance so far on the dollars heading into the U.S. Open. You got the Swiss franc worst performer down 0.45%. Best performer on this session is the loonie with a gain of 0.45. And again, we're seeing dollar CAD approaching a near-term key support structure, that longer dated trend line or channel support and we'll look at that as well. Okay, let's jump right in. Here is what Kiwi Dollar looks like from yesterday. Well, we defended the daily range. I guess we'll just take a look at the radar charts first. Here's what Kiwi Dollar looked like. And let's go into the daily real quick. So we were looking on the downside of the Kiwi Dollar. I actually ate a stop on this last night. I'll show you what I was looking at. Craig says, thanks so much. You are great for all of us. I've learned a lot from you. Hey, Craig, more than welcome, man. That's the most important thing. So here's what Kiwi Dollar looked like yesterday. I was looking for this momentum, kind of traveling here, kind of teetered out right below 60. You got a near-term short trigger and overnight trade. I was trading it against that 66.77 region, which is a nice pivot in price, longer dated key 618. It would have necessitated a break of this basic 3-point touch trendline resistance. So we took a quick 25 pip stop on that once we broke it earlier this morning. Still looking broadly to the downside. Remember the Kiwi Dollar daily chart that we talked about yesterday. Okay, the broader slope extending off that October high, which is basically a mirror to the slope of the lows that we made both in November and January. So we're trading this range, okay? We noted, yesterday that 3 points of that resistance had got really nice pullbacks to the downside. The other phenomena that we talked about yesterday is the last 4 out of 4 times that we've seen Kiwi Dollar push through the $200-day moving average. The following day has seen a quick snap to take back all those gains, okay? And that's happened 4 out of the last 4 times. So here we are again, popping through that 200-day moving average yet again. Major key resistance is still that trendline resistance, and as we're rallying here, we're looking for short triggers into this region to get back on the short side. And again, this is going to be our near-term, just for the record, our near-term bearish invalidation level. If we get through that, you're looking for a rally up to 67.60, 67.55, and then again, you'd be looking up here, and this is going to be the October weekly reversal close, and that takes you into 68.04, 68.05. But the ideal scenario or base case scenario is that we see this push higher to get us a short opportunity. Here's what it looks like again on the 30-minute. So we pop through that near-term resistance. You're seeing it offer some support. Don't want to do anything just yet. And who was asking about this? Joe. Here he is. Joe was asking earlier in the session, said, hi, Mike. I took a short on the Kiwi last night, held it for a while, and finally closed it out around break even. I'm still looking short at around 67.08. Is this valid in your opinion? So 67.08. So here's what I'd be looking at. Let me ask you this, Joe. What are you looking at specifically with 67.08? Is that a retracement that you're looking at? Because I do have the high day closes higher near 67.20. And in fact, if you look at the scalp chart, the level that we were working with since last week or 2 weeks ago is still that 67.20 region. So for me, you might get a little bit more of an upside stretch, but broadly speaking, I'd be looking for short exposure. The one caveat I don't want to put it past is a rally back towards like 67.55, 67.70, and a probable better short opportunity. You can see, if we zoom out a little bit, we talked about this yesterday, the median line formation that we were working with off the lows from last month. You can see median line support broken, median line resistance, could see another spike here to complete a 1618 extension off the low before turning lower. And that would require and necessitate a break above that, headline trend, that major trend line we saw on the daily chart. That's just a side thing there, Joe. But I would be looking, for short triggers on a rally here in Kiwi Dollar. I looked at the daily trend line yesterday, but I don't know how precise it is. Joe, what do you mean by that? So for us, all we're looking for is that price action gives us clear-cut definitive reversals, rejections, inflection points. And again, if we just take the basic 2 major lows, this is the yearly low, a significant level. This is the November low, I wouldn't say a multi-month low, but a low nonetheless. And the slope continues to define a lot of turns in price, namely that one there that we looked at yesterday, resistance, kind of messy here, resistance, resistance, resistance. And then that same slope extending off that October 21st low, kind of messy, resistance, breakthrough, support, support. So on a slope like that, in my humble opinion, Joe, I would say this is a conviction slope for sure. We've gotten enough tags on both resistance and support to validate that that's the gradient the market's moving at. Now that doesn't mean we can't invalidate it. It could plow right through the highs and ball game over. But as it stands right now, we're in the trend until we're not. I hate to use cliches, but that's the name of the game. Make sense, Joe? So I'll make sure on the same boat there. So let's do this. Let me bring up the near-term chart for Kiwi and see if there's any opportunities for triggers here as we travel higher. So even though we're not necessarily trying to take a long position, I like having these triggers here. Why? Because it tells me when I don't want to be looking for the short trigger, if that makes any sense. So we were looking for a rally to sell. This just validates near term. Keep looking higher. Let this thing give us a nice rally. If I can get close to the weekly opening range high, remember, objectively speaking, that would be sort of the ideal entry for me. Try to look for a little bit more of an aggressive short stance on that. First targets again would be that 66.77, 66.71 level, and then right down near that 66.07. So no triggers here that are kind of pointed out to us yet. Remember, you're looking for about 26 pips per scalp, so we'll keep that on tap here if we get a trigger on the upside. Joe says, very good, sir, thanks. Yeah, you're more than welcome. More than welcome, Joe. Taking a break-even stop like you did on this yesterday, don't even sweat it. Don't even sweat it. Again, like I said yesterday, break-even stop never hurt anyone. I'd rather take a break-even stop than try to press a trade. That might not be going in my favor. All right, so that's Kiwi Dollar. Any other questions on that before we move off? The best player of last night, and what I actually was getting in and out of the most, was Aussie Yen. I'll go over that in just a moment. Let's just go through the radar charts first. Here's Euro Aus, another trade that we're looking for a pullback to get through and rally through that 54.60. This 54.16 level is going to be the validation for a near-term reversal. I noted that in the radar chart yesterday. First, it would necessitate a break of that upper median line parallel, basic 236 retracement, and a break above there as we were getting some divergence into the lows. Resistance trigger break, check this support, shifted the bias higher. Again, as you came into these highs, you started making some divergence last night. Price action making a higher high, the oscillator making a lower high, giving us a little bit of a pause. That you might see this decline tickets out a little bit lower. I'm still looking for the long trigger. Hasn't necessarily given out yet. Here's what Euro Aussie looks like on the daily chart. And then we'll go in 30 minutes in a second. Just wanted to highlight this again. Just a quick reminder of why we're looking for the rebound. The broader bias never changed. We're still looking for a broader downside bias in the euro. The whole idea behind playing the rebound was this critical support confluence. You have the 200-day moving average, basic sliding parallel for the current operative slope we've been working with off the lows, the former long-dated median line formation that we've been getting very nice pivots off this year, and a basic 50 line for the operative slope we're in off the highs. Came in right there. And I got a question yesterday, guys, of someone asking me about how I drew that 50 line. I guess it wasn't clear here in the webinar. I'll show you an example on something a little bit larger range later in the session, but I do want to go over that real quick because I got someone asking me, I don't understand how you did that. So let me just do it real quick. If this is, again, I'm just doing this for an example. If this is your formation, and you want to draw a 50 slope, a 50 median line slope. And basically what we're doing, guys, is we're dividing the broader structure into quadrants. So you have the upper half, the lower half. We want to see what the 50 line is there. The easiest way to do this on market scope, if you're trading with FXCM, is just a basic retracement from the reference point directly to the median line. Okay? Follow that slope line to the downside, that baseline in the pitchfork. And when you do that, clear out all the retracements, keep the 50, and then just take the same slope line, trace that same slope, and you put the initial point right at that 50 level where it converges on the baseline. Okay? And that'll give you a 50% split of that top half. So you can see a lot of times there's really, really nice symmetry with that kind of move. And here we are again. This is an example of the 50 line of this formation that caught that low that we made on the 22nd and the low that we made on the 23rd. Okay, so that's the premise of why we're looking to play the rebound. Here's what the near-term chart looks like. So within the confines of that formation, here's what we've been following for the last 2 weeks. We're looking for the topside break here, kind of messy. We broke through support, 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 failure. Okay, 618 retracement comes in at 52.52, and again, the bearish invalidation level still along with that 200-day moving average, which currently comes in right a hair below the 152 handle, 51.98. Okay, so on this move to the downside, we'll see if we can find some support, see if we can find some long triggers. Here's what Euro Aussie looks like on the intra or on the scalp charts. Euro Aussie. And no triggers of sight that we can look at. You are starting to see some support at 40. That's something that's encouraging, but nothing imminent. So we'll see if we can't get a long trigger here as we open up the U.S. trade session. And guys, if you've been trying to look for triggers in this market and you've been getting frustrated, I'm 100% with you. It's been a very difficult market to trade. It's like a schizophrenic market. Every move is completely faded. Typically, that's our strength, and that we want to be super nimble. Okay? Get that on a trade like this, you get that 60 pip ATR, you got it in your check. Sorry about that. I think we're back. But if you've been trading with us over the last couple of days, I know that it's been very, very frustrating on the near term, even on the swing trades. You know, a lot of them are just kind of going and coming back and going and coming back. So such is the market, guys, and we have to be adaptive to what the market conditions are showing us. These times will pass. Volatility will come back with a raging demeanor, and when we do, we'll be poised and ready to go. So, long story short, for Euro Dollar, which we'll go over also in a moment, looking to see if we can get a decent pullback here to get back on the long side. Just remember, for Euro Aussie, the only thing I really want to stress to you guys is that major critical support on the daily chart. Really, the bearish invalidation level is the 200-day moving average. And again, the level that we'd need to clear to the upside to validate a near-term reversal is still going to be at near-term, that 154.16 level right here. So I haven't taken personally any positions on this. Again, it's a wider range scalp, so you want to be a little bit more meticulous with your entries on a pair like this. Yes, great point, Eileen. Also, she's noting end of month clearing. Guys, I almost forgot. Thanks for bringing that up. So tomorrow, well, this ends the last final week of February trade. Tomorrow we open up the last month of the quarter. And certainly the opening ranges for the months have been a very strong part of my personal strategy. Now, if you look at a lot of these pairs, guys, the monthly opening ranges for February never gave us jack. Okay, the first 10 days of the trade, you soared into a new fresh yearly high, and you came back, retraced the whole thing. Nada. You're basically almost virtually unchanged on the month. And we can go over a lot of pairs that look exactly like that. If you take a look at some monthly charts, guys, it's just wicks. I don't even see a candle. So in that condition, nimble is the name of the game. If you're a little bit hesitant more heading into the end of the month, which I typically am, reduce your leverage size. Let's get through this noise here. We can get some clarity in price action. Eileen, just want to premise that by saying one thing. It is the end of the month. It doesn't want to necessarily deter us from taking any trades, but we just want to be a little bit more picky. Okay? There's still definitely opportunities. So, that is Euro Oz. And on a longer dated note, ultimately, just having my notes here, ultimately we would be looking to sell, guys. So if we do get the break to the upside, I'd be looking at this median line. Or more importantly, depending on where we are in time, this was sort of the idea earlier in the week if we had gotten the breakout for a possible short entry back to the downside. We're broadly still looking for that direction near term. We're seeing if this bounce is going to offer anything more than that. Picky versus schizo. You like that, right? Picky wins. Graham says agree on the first and / last day. Caution, etc. Tomorrow is not the last day of the month. It's a leap year. Oh, that's true. It's the last full week, Graham, of February trade. The month does end on Monday, and we'll open things up for March trade right after. Okay, next up on tap, I just want to touch on the Aussie Swiss, another Aussie pair that we've been following over the last couple of days. If you guys remember the Sunday update, we were looking for the breakout here to stretch high into 72.25. It took out the 72.25 target in the first couple of days of the week. I hardly got anything on this stretch here. It was kind of a bummer, but specifically because we were literally looking for this break early on Sunday, it was so quick, and the market just really ran to the target. We made a full round trip since, and here we are again. Almost unchanged yesterday, slight gain on the day. Looking for a pullback here in Aussie Swiss. Here's what it looks like on the daily chart. All right, this thing came into the major, or not the major, I would say, but the yearly open. That's what you see there at 72.30, and rejected earlier in the month. We saw that pull early in the week, rather. We saw that pullback find support, not quite at the 50 line, but certainly on the same slope off the lows there. And where focus region is right here. Excuse me. Now you're trying to make a break to the top side right now. And here's what it looks like. So here's last night's where we were, and here's where we are now. Key support, okay, for Aussie Swiss. We're looking to buy pullbacks as we came into that near-term support target. Didn't really get the drawdown into that 70.58 level, but you did get some really nice triggers on the 5-minute, on the 1 minute, on the sort of settling here that you made into Asia, and on the pop in the what is that? I can't get it out of my mouth. The London Open to the top side there. So you're pushing through resistance now. Look for a 71.84 near-term resistance, and again, that's going to be that longer dated trend line, which is going to come into focus right around that level. So keep in mind, let me just zoom out here real quick, where we are in trend. Okay, there's that long dated trend line off the highs from September. Sorry guys, bear with me 1 minute. Okay, sorry about that. So for Euro Aus, if this is going to be the material breakout that you'd be looking at, again, look for some resistance near that trend line, near that 71.87 level. On a basic retracement of just this stretch, which I feel a little bit more comfortable doing now, you can see, I didn't highlight these levels because the major level I'd be looking at on a stretch like this is the 50, which is something that we were watching anyway on this confluence region. So we're popping through that. The 718 comes in at, or 618 comes in at 71.70 near term. Look for that resistance there. In fact, let's clean this up a little bit. And again, I'm just going to highlight that 72.30 open there. So a little bit of amendment to the levels there, guys, but that's what I'd be looking at on this reversal here in Euro Aus. Now remember, since we saw this reversal in price, and the break into overbought territory again, remember that this can stay up here for a prolonged period, guys. We did this earlier in the week, and it stayed in there for literally the almost entire session of U.S. and European trade here on the 22nd. So just keep that in mind. Look for some near-term resistance here as we head into 71.80, 71.70 on Aussie Swiss. All right. If there are no other questions on that, we jump into the meat of it. Let's jump into yesterday's scalp update. Had a lot of meaty plays here. So, euro dollar, still a trade that I'm very interested in taking a look at. If you consider the fact that euro has dipped right into that key region that we were talking about yesterday. If you guys remember in the webinar, who was it yesterday that was noting right as I was closing the webinar, you're getting the pullback in euro right now? I don't remember if it was Joe or Craig, one of you guys, but that was literally the pullback right after. You got a clear-cut rebound right through that initial topside resistance. Key resistance still 1045, 1050. Here's what it looks like now. Dave says that was me. Hey, Dave, yeah, good call, man. Well done. Well done. Here's what the daily looks like. And again, for the euro, love the levels finally at this point. Remember, as euro was coming into these highs, I really didn't want to touch it because it was getting kind of messy against a region that I was really looking for a major key resistance. A break above this should have kept the focus to the upside. You saw that we couldn't really hold before this thing plummeted to the lows. This is a major, major level of support and why we're looking to remain constructive above this. You have the 100-day moving average, the 618 retracement of the 2016 range thus far. And both of those converge right on former trendline resistance, breakthrough, now support. So the rebound, finding resistance, look at that, 1045, right on point. 200-day moving average comes in at 1046. So your major, major focus range moving forward for the euro is 109.64 into 110.45. A break of this is going to give us our directional bias. Our favored move is buying pullbacks with a breach of the highs, looking for that 111.20 level again. And that 111.20, the 618 off that high from October, converges on what? You got it. Whoops, did not want to do that. On the median line off the lows. For dramatic effect, there it is. Joe says I was long right from the beginning. Thank you. 109.61 closed out on a scalp. Well done, Joe. Well done. That was a really, really nice entry. And again, sort of the sweet spot that we were looking for. If you look back to, I'm not sure which one it was. I think it was the radar chart from the 23rd for the euro. Yeah, so we're not ready to quite act, but we're looking for long triggers on a move into 109.56/64 or on a breach and retest of 110.45/59 as support. It's the same exact ballgame. Nothing's changed. Nothing's changed whatsoever. Here's what euro dollar looks like on the intraday. Okay, and here's what we look like. Well, this is what we look like on the 23rd. Let's go back to last night's update, and here's what we look like last night. Okay, so there's that 109.54, 109.64 level. We dipped right into it. The vault taking us right into resistance, and the key region heading into the close of the week, close of the month, is going to be that 109.64 into 110.45. And again, we're looking to buy pullbacks. Remember, the long entry for the swing trades is at parity. So we'll be watching here very closely for some long triggers. Let's see what the euro dollar has for us. Okay. So on a move like this, you can see I was looking for triggers earlier today. On a move like this, guys, the ideal, like if you're telling me what would be the most ideal thing you'd be looking for in the US Open, I'd be looking for a new low in price, some divergence in the signature here, and then a trigger break. So if we move into a low price, the oscillator preserves the low, As soon as you see that topside trigger give out, that would be a nice, beautiful long entry. And again, initial topside targets, 110.45, 110.55. And if we get through this, man, you got room. First target isn't until 111.20, 111.18. So I do like the way it's acting down here. I wouldn't put it past this thing to make another run at that former upper median line parallel. Maybe it's triggered down here, or maybe into the close of U.S. trade, open of Asia trade tonight if we get back here again. Long story short, not really interested in taking any short exposure from this point on Euro. More so looking for that pullback to get me on the long side. Same idea as yesterday, guys. Nothing's changed. Nothing's changed. Questions on Euro. How far a pullback looking can you, or how far a pullback can you do some forward looking for what it's used for the euro dollar? You're saying? You just said it. Thanks. Okay, Eileen. Yeah. So basically, this is going to be the bullish invalidation level. Anything beyond 109.60, I don't want to try to play the rebound. You do have a longer dated trendline support or the lower median line parallel for the operative structure that comes in lower. Remember, this right here is actually the December high day close, the reversal close that we made there on the 15th, excuse me. But this is sort of the ideal scenario where you'd want to start to look for long. Initially, opening the U.S. market, if parity holds a support, I would be interested in taking something here, sure. But I kind of have a feeling that we're going to dip a little bit lower before we start to move off. And remember, when we're looking for divergence, it's all about the candle close, okay? All right, moving right along. If there are no other questions on the euro dollar, which has sort of been the major one I've been looking at, heading into tomorrow's GDP print, may be a very nice player. One other caveat or one other note of caution I do want to note to everyone in the room, heading into the weekend with the G20 summit coming on tap, if you have any euro exposure, just make sure that your risk limitations are well defined. You could get a lot of volatility on the Sunday open if there's rhetoric or some comment from some clown coming out. You might see the euro pairs really start to shift back and forth. One of the other aspects that we've been talking about over on the daily FX desk is the impact that a possible Brexit would have on the euro, and how the euro dollar itself may be the biggest loser if you do see that scenario playing out. For us, that's all rhetoric. It's good coffee talk, water cooler talk. The trade, as it stands right now, looking for a long trigger lower down. All right. Last but not least, Aussie dollar, or Aussie Yen, excuse me, my favorite setup from the last 24 hours. Aussie Yen was coming off of a critical area of support. It's 79.88. Now, we did dip below it yesterday, but we came right off of a median line, extending off that late high from last week. So, excuse me, on a conviction move like that with divergence into the low, backed by a resistance trigger break, shifted the focus to the upside. Initial target, as I noted last night, was 80.80. There's a basic 50 of the weekly range and the upper median line parallel. Took us a while. We missed it on this last sprint, but we did finally make it through. Next soft target, 81.46. Here's what Aussie Yen looks like on the daily. Keep in mind that the major play that we've been talking about here, or the premise of the upside bias, was again the critical area of support that we were coming into. You didn't really, well, you did, I stand corrected, get some divergence into this low, price action making a lower low, the oscillator making a higher low. And then the reaction that you got yesterday was really the tell. Now remember, when we're doing these setups, guys, we really don't ever know if this is going to be the operative slope until we see some market reaction around it. And I noted that yesterday. Well, we got the reaction, I think, that we need to validate this near-term slope. Yesterday's low coming right in, just below that 79.88 level, rebounded very sharply, and we're looking to play that upswing here in Aussie Yen. Here's what it looks like on the 30-minute chart. Oh, well, let me take a step back. This is the weekly chart, and we talked about this yesterday too. The 80.16 is the long-dated 50% retracement from the crisis lows, okay? And we haven't gotten any closes beyond that yet. Resistance, the lowest from last year, that's sliding parallel off the highs from September. Takes us just higher near 82.50, 82. Here's what the 30-minute looks like. Sorry to go backwards in order, guys, but as it comes. Oops. All right, so right on point with what we were looking at. You did get that 80-80 tag, a nice pullback. Did give you a reset on a trigger break here in early London trade. Again, first target 80-80, next target 80-46, so we're just shy of that now. The major resistance for Aussie Yen is going to be up at the 82 handle. And that's not only just a Fibonacci confluence of the 50% retracement and the 100% extension, but it's also the objective weekly opening range high. So a break above there would certainly suggest that there's a much more meaningful recovery likely in Aussie Yen. And again, that's the low from last year, specifically the close low, and that sliding parallel that we've been working off the highs there. So the best thing I love about Aussie Yen is just the clarity of the levels is profound, I think, and I think it's something that's much more conviction trade for me, at least in the near term. Any questions on the Aussie Yen setup, levels? Feel free. And again, if you need to take a snapshot, guys, that camera in the top right-hand corner is for your use. Graham says, Aussie Yen, did you see a trigger going through 80-80? So again, through this rally here is a little bit too early for me here in the US, at least for today. Let's see what it looked like. I don't have anything on this since yesterday, Graham, personally, any positions on it, but let me bring up Aussie Yen. So the trigger that I was talking about for the long exposure here would have been something like this. Trendline resistance. This was also the first trigger break that took you above 30. It's a water range scalp. So you're looking for 40 pips. So a stop here against 80-30. Hey guys, I'm sorry about that. Not sure why the audio keeps ripping off there. Graham says thanks for the pip. But Graham, what I wanted to tell you is, again, lost my train of thought. The opening range, not a strategy in and of itself, but I'm not sure where we lost off. I just want to show you the opening range for US yesterday was a textbook one. The opening for the session came in at 80.20. We made a low at 79.60. We checked the low 3 times, couldn't hold, made a run at the highs. Once you break the high, it gives you the validation to look for a late session high, and that's exactly what you got. You closed just above, or just below rather, the session high. So look for those directional breaks to give you that tell. Not a strategy in and of itself, but when it's accompanied with a trigger in price, a trigger in momentum, these types of things, when those come together, those tend to be very strong conviction scalps. Graham, does that help? Does that make sense? He says, thanks, very helpful. You're more than welcome. All right, so that is Aussie Yen. I still like it. Look for 81.46 on the pullback. Look for some support again at 80.80. Major key resistance just ahead of 82. And a break here, which is just a much more aggressive play to the upside for Aussie Yen. Predicated a lot, mostly, I think, I don't want to say mostly, but looking for some yen weakness to help accompany that more so than necessarily than just Aussie sheer strength. And here's what dollar yen's doing. You see a nice dollar yen rebound off the same low, which is the 2618 extension off the highs there that we made at 111.02. Another rebound, in dollar yen doing what dollar yen does. I'm sure ripping up a lot of people. And $4 yen, looking for near-term confluence support, by the way, at 112.95, just ahead of 113. That sort of lines up with the near-term resistance that we're looking for over on Aussie yen as well. This is a confluence of the 50% retracement of this entire stretch off the highs from last week and basic trendline resistance off last week's high. All right. I think, guys, did we cover dollar Swiss? I don't have too much to say here. If you guys remember, we were talking about the possible turnover. It turned over a couple of days ago, just ahead of that 100.27 level, which was our sort of ideal level that we were looking for. You saw the pullback almost complete a 50% retracement before seeing a rebound here, but the near-term picture still looks pretty clean. Okay, it looks like we're breaking the top side of this median line formation, which again has me looking at that 99.58 level, possibly a rally back towards parity before we turn off again. But at the end of the day, we're looking for a rally to sell here over the next couple of days to get back on the short side if we're going to continue to hold this structure here in dollar Swiss. And again, the swing side of things, also looking for a short near dollar Swiss. I think Jamie was talking about 99.20 as well, or 99. Let me see what his levels is. 99.11, 99.11, 99.30 is what he's looking for. So straddling just higher from where we are right now. That 100-day moving average comes in at 99.40. Dave says EuroCAD looking for longs. That would make sense, sure. EuroCAD, let me take a look at. Not yet, though. I would say EuroCAD for me, and I highlighted this region with you guys earlier. I remember if it was last week, I think. Still looking for that 49 handle, 49.20. This is just a basic 236 of the entire advance from last year's low. And a basic 100% extension, 2 equal legs off the high. Takes you right here. Add to that both Fibonacci confluence. Add to that, they have the 100-day moving average sliding right in there as well. Now, one thing with this, Dave, and I like the idea of finding some support near 149. One thing I want to just caveat here as well is objectively, my friend, this is the yearly opening range low. So if you do make that break sub 149, things could get messy in a hurry. But tentatively speaking, on a relative basis, yeah, I'd be looking for some near-term support. Let's see what the near-term chart looks like. EuroCAD. Yeah, there's that 49.15, 49.20 level again. Okay. Okay, let me make this as clear as I can to you, Dave. Looking at this here, it may move off by 149.50. Yeah, again, 145, 149.25 is 149.20. This sort of region here is what I'd be looking at. But look, this is one thing I would say. The one caveat I would have is if you're going to take a scalp like that, Dave, it's important that we recognize that's going to be counter trend, both for the weekly bias and for the near term bias. For me, objectively speaking, I would look at this as an opening range break to the downside. You set a Monday high, you set a Tuesday low, you fail miserably to even approach the highs. You test the low breaks, you're bearish, looking for a late week low. The other thing I'd be looking at, again, objectively, is the momentum signature. Oversold condition, resistance at 60, resistance at 60, oversold condition. These are all factors that would still have me saying that the momentum profile remains weighted to the downside. So remember, you don't want to fall into this habit of trying to catch a falling knife by trying to call low on a breakdown. Don't get me wrong. If we get into this region, market settles, and you get a decent long trigger, sure, I'll take a stab at it. Half leverage, what I would usually trade, because again, it's counter trade to the daily trend. You know, there's a trigger there that might come into play later in the session. But just be aware of that. You know, I got no problems, and I can. It's funny because the guys on the desk laugh at me sometimes. I'll have a day where the market's rallying in euro dollar, and you know I've made a good chunk of pips on the short side, and there's nothing wrong with that. But on a holistic basis, guys, on a regular basis, it's always gonna be better to trade with the directional trend for the week, for the day. If you're taking counter trends, that's fine. Nimble is the name of the game, and lighten your leverage just a little bit. So if the market does make a run, that stop won't hurt as bad. Dave, does that make sense, man? I think there's some room here near term for a little bit more of a downside stretch before we turn around, but largely speaking, I do like the idea of taking a rebound as close as I can to that 49.20 level as I can. All right. He says, sure, cool, thanks. I'm watching it. When it goes, I'm boarding the long train. Right on, Dave. Like the enthusiasm, man. Okay. A quick touch on dollar CAD, and we will go ahead and wrap things up. Here's what the dollar CAD looks like on the daily. I just want to highlight that we are testing that basic channel support extending off the lows from May. We tagged it again in October. Right now comes right in line with the basic 38.2 retracement of that advance from the May low to the highs that we made this year. And certainly if we do see a downside break here, more importantly on a close basis for the daily, I want to see if momentum can finally make it below 40. We haven't really seen any 40 breaks in momentum since early last year, and that was a very dismal, meaningless correction of a couple hundred pips before we continued higher. So we'll see if we can't get some downside moves here, is what the 30-minute looks like. Again, Dave, very similar to the setup we were just looking at over on EuroCAD, an objective weekly opening range. Here's your weekly open. You set a low. This might have acted as a break of the weekly opening range high for sure. I would have gotten faking out here, but divergence in momentum, higher high in price, higher high in price. Not something I want to try to press on a break, right? So the long trigger never gave out. And certainly the reversal and break back below near-term trendline support had you looking at the weekly opening range lows. We bounced off that here yesterday. A break of the weekly opening range low has us looking lower, but watch that key support confluence. Okay. Subsequent targets, by the way, if we clear this range of 36.30 specifically, you got 35.40 is a 618 retracement off the October low. More importantly, 34.60, long dated 618 retracement, that swing high from September and November. Come right there. So again, the levels are stacked up and they're pretty nice. It's just waiting for the proper pullback, guys, to offer you a nice entry opportunity on this one. Even from a scalping standpoint, the market, like I said earlier, has been so schizo with this back and forth nonsense that you want to be as nimble as you can. So dollar CAD, no play for me. Just want to highlight that we're testing a near-term support confluence. And if we do see that downside break, I think there's a lot more room for us to travel. The dollar index on the back of the data that we got today, just want to take a quick gander back at that. Remember the key range that we're talking about, 12,123 is support, 12,154 is resistance. I just wanted to show you the 30-minute for the dollar index. Looks like this. Okay, and this is the same chart that we added earlier in the week. Nothing's changed. The only thing I've added is just a retracement off the low here. Look where that, well, I took it off because it's messy, but the 236 comes right in line with that key range. Okay, and the 38.2 would be the first target, excuse me, on a break below 12,123, which is a major level that we were following last year. That was that April high day close, a nice reversal close there. You had some rebounds and pivots, resistance, now support. Okay, and that's the level you need to break to the downside to really get this thing going. Targeting first 1298. Surprised the dollar not rallied more this morning from the data. Maybe the market is waiting for more Fed folk speech. Absolutely, Eileen. There's more Fed talk or Fed speech on tap, but more importantly, tomorrow's GDP print is pretty big. Not just because, well, here's the thing, guys. This is the second read, right? So we've already gotten what? Okay, this is what I was trying to show. We have already gotten there it is. Let me just go to the US docket. We've already gotten the first read at 0.7%, right? And a 2.2 this is the quarterly read, excuse me, the 0.7%. The downward revision of 0.4 is really what the major concern is. And if this comes out even tighter, so a 0.2% print, meaning that GDP in the fourth quarter was much, much weaker than we had initially anticipated, we're going to bring it back to the interest rate expectations, okay? And I've brought this up a couple of times this week, and we'll continue to watch it. The Fed funds future rates still factoring in. Most market participants are factoring in that we're going to see rates hold at 0 or a quarter to 50 basis points up until September, where you start to see a little bit of a shift more towards a 27% chance that we'll see a hike, 28% chance. Really, not until next year do you get into like the 30s. So if we see GDP tomorrow come out much weaker than expected on that 0.4% print, look for this to get kicked out, meaning that quarter to 50 basis points should start to be 90% more across the board. And the percentage or the possibility that we'll see a 50 to a 75 basis point will continue to decrease. If it's much stronger than expected, a 1% print or stronger, look for the exact opposite. Okay, look for those interest rate expectations start being brought in. And you'll see that this will start to deteriorate, and we'll see a build on expectations for a quarter to a 75 basis point read. So I think that's one of the things that you're looking at, Eileen, with the dollar. And remember, when the dollar is at resistance, or when a trade is at resistance or has rallied, and we're checking resistance, very rarely does a good data print fuel the break from there. You know what I mean? This thing had come back and tested support. We got the data release. You're seeing a little rebound here. But largely speaking, you're still at that resistance, the 50% retracement at 12,154. So on a breakdown level, by the way, again, this is just my personal expectation or my personal outlook, but this is sort of the break point I'd like to see in time. And that basically takes you into like Asia today into tomorrow's data print at 8:30. Here's the 8:30 data print tomorrow. So if you see, that we hold this range and the dollar index comes into this read, or even if we're near resistance and the data is bad, a break below this level in time at this point would be sort of a very nice confluence region break to the downside, and certainly would validate the reversal in my mind. Exactly, Eileen. Dave says, can you look at Aussie Key? I'm interested for perspective on Euro Oz and Euro Key. Sure. Yeah, let's take a look at Aussie Key. Here's what the daily chart looks like here, Dave. Aussie Key in the 30. Okay, you're unchanged on the month here, on the week rather, excuse me, Dave. So this is a very similar trade to some of the other Aussie crosses that we were looking at. There's the open of the week. You're rallying to a high. It's sort of like the Aussie Swiss, although on a much, much, much smaller scale. But you rallied early in the week, and you took a round trip right back to the weekly open. The weekly range is set, and that's pretty much it. I mean, this is a range trade any way you look at it from a near-term prospect. I would like to be on the long side, actually. I think that Kiwi losses could outpace that of the Aussie, but I don't have any validation here. Even from a monthly standpoint, there's your monthly high, there's your monthly low. You're right smack in the middle. So we're not next to any extremes. We've kind of been straddling the slope line that we've continued to follow for a couple of years now from the 2014. Remember the 2014 January low? That's the derivation of where the slope came from. Has continued to define price. Lately, what do you do with that? My mind, nothing. My mind, nothing. Again, the key levels I think are pretty clear. Not 109.10, 109.35. You've got the 200-day moving average, a host of pivots, and some really nice reversals in price. This is the low day close for July. There's a lot going on here. Key support near term, the 618. We've already rebounded off this earlier in the week. And that's a confluence to the 50 of the broader range off the April lows. Long story short, to put things bluntly for you, Dave, what I'm looking for here is support at 107.20, resistance at 109.10. Until we break that range, I treat it as such. And, that's just not me, too. Momentum's saying the same thing. I mean, if we just look at the daily momentum signature heading to the close of last month, there's a 60 hold. Well, there's a 40 hold. Not much of a momentum picture or a strong momentum profile. So on these trades, I love Aussie Key, and we've had a lot of plays on Aussie Key last year when we got those really nice stretches. But when you get price action like this, and it's only a 24 pip ATR, not much clarity in the middle of the monthly range, for me is just sort of a wait and see. Put it on the radar for now. Dave, I wish I had some more conviction on you on this for you, but does that help? And again, I understand that you're getting involved in Euro Oz and Euro Key, but always remember, man, we want to take every trade on its own merits. Too much reliance on a corollary, way to ascertain your bias like that sometimes leads to some foggy pictures. So just make sure that we're being a little bit more objective here for the price action as it pertains to this specific pair. All right. Any other questions? Do feel free to throw them on the message board. I think I got your – oh, David, looking at sterling dollar, daily divergence on RSI comments, would you ride that, sterling dollar? Okay. We talked about sterling here. I think it was Joe. I got that email from you yesterday, my brother. No worries. That's why you're here. Look. We were talking about possibly trying to fade this move yesterday, and we were a little bit more reluctant. We talked about 39.20 of the level that we would try it, if at all. And it seems to be, at least near term, what we're holding. So the 88.6 that you're looking at here is a basic 88.6 retracement. This is from the advance off the crisis lows that you made in 2008, 2009, late 2008, early 2009. It's been a fib that has been sort of an underground fib. It's square root of 786, and a lot of times goes unseen by a lot of market technicians. I've seen it catch some ridiculous peaks and troughs. So something I always keep on my charts for the wider scale setups. Looks like you're seeing a little bit of a rebound there. The major support level or the major support structure that we've been following, this median line that extends off the low that you made in July of 2013. Okay, it's the same slope of this formation. Comes in just lower. The thing I don't like about it, David, is the near-term chart. I mean, look at the 30, guys. There's really the only thing that we talked about yesterday is the divergence. Higher high, lower high. But one caveat with this, who wants to tell it to me? These divergent signals, the farther they are from 50, the weaker the signal. So a divergent signal where both reference points are sub 30 or above 70 typically are going to be your weakest signals. Doesn't mean they're not going to play out. It just means if that's the only premise I'm taking the trade upon, probably not something I'll be willing to jump in with both feet just yet. In fact, on this rally here, Dave, you're seeing that momentum is holding 60. right? So do I want to try to fight this here? I don't, it's just not there yet. The conviction or the triggers just aren't there yet. And while the ATR is showing 43 pips over the last 24 hours, it's been super tight. Okay? So for sterling and all the sterling crosses for that matter, guys, have been completely off the menu for me right now. And I think that's okay. David says, okay, thanks. Dave Free says, yes, just additional confirmation. You got it, my man. A quick look, real quick, before we wrap things up on what's going on in the crude markets, guys. That's going to be top headlines as well. Listen, nothing's changed as far as the crude levels are concerned. You're looking at that median line actually did offer some support yesterday. We were talking about that and offered a nice rebound. Still looking at this range here. Major key resistance still 33.65. Immediate resistance is right here, what we're looking at right now, yesterday's high, which is basically on this median line, which has offered some really nice pivots in price. Key support or near-term support, the median line off the high, that takes about 30.60. Bullish invalidation, 29 handle. That'd be a 618 retracement of the advance and would necessitate a break of this ascending ML formation. So finally getting some clear pictures here on crude, and obviously the implications on the CAD crosses will be something we'll want to take into account as well. All right. Okay, guys, we're going to wrap it up there. U.S. markets just came online 1 minute ago, so watch the dollar index. It's something I'll be paying very, very close attention to. The gold trade also giving us that breakout, made the break, pulled right back, still looking for that move towards 1250 again. If my chart wants to load. There it is, 1240 first, rather, excuse me. That's 50% retracement that we peaked at. Keep an eye on this. The 30-minute chart that we looked at yesterday is still something I'm keeping a view on. There's the consolidation. We broke, checked it as support. We even checked it as support again. Now on a broader view for the daily sort of breakout play, instead of a scalp function, you're going to want to bring that consolidation to this high and see us kind of play this for a little bit before we break for another move. And obviously, a topside move, you're looking at the highs, 1260, but more importantly, that sliding parallel that we looked at yesterday comes in right along that high, and that's what we're going to be looking to target if we do break for another run here in gold. All right, quick housekeeping note, guys. There's going to be no intraday update tonight. I do have obligations elsewhere, so we're going to give you an update tomorrow morning on some of the trades that we'll be following. Best of luck trading today, guys, and we will see you all tomorrow, next week. Keep in mind the free public webinar on Monday on Daily FX, and then back here on SB as usual Tuesday, Wednesday, and Thursdays. Till then, best of luck trading, guys. Wish everyone an awesome weekend. Cheers.